We saw that unprecedented move by the Fed taking place, a pledge to keep interest rates near zero for at least 2 years, and that stemming the global rout for some time. The central bank's decision on rates is likely to be good news for the so-called carry trade, though. So how do you see this entire scenario playing itself out, where the rand has come under significant pressure so far?
Morning, Alishia. Yes, you're right that the rand has come under pressure along with most emerging market currencies and also risky assets. As far as the FOMC statement is concerned, it was a surprise. This is the first time that the Fed has mentioned or set a specific date for how long they see monetary policy remaining at these ultra accommodative levels. And of course, that is going to be supportive of the carry trade. One concern, however, particularly for Asian markets, is that inflation in those countries is rising, and we've seen a range of monetary policy tightening measures happen across the region, and this argument also applies to South Africa. However, if US rates are going to be on hold for an extended period of time, that could definitely encourage continuation of the carry trade if these central banks continue to raise interest rates, and then we could find ourselves back in the same unpleasant situation that we had a year or two ago, where there's now talk of currency wars occurring and further intervention in currency markets.
Of course, we've already seen some measure of intervention taking place both in Switzerland and in Japan as well, and with what's played out, still keeping the Swiss franc and the yen strong. The prospect of further intervention by both the Swiss and the Japanese authorities really being kept on on the agenda at this stage and being watched out for. What are you anticipating in those regards?
Well, we've already seen intervention occur by both banks, Alishia, late last week. And of course, as these currencies continue to appreciate in the current environment, they're seen as being safe haven currencies. And as they continue to appreciate, it's obviously going to pose a dilemma for the policymakers in the respective regions. So we wouldn't be surprised to see further intervention in the currency markets, particularly from the Bank of Japan.
Well, in addition, we've seen the Mauritian Central Bank announce on Monday that it would be diversifying its reserves away from the dollar and the euro, and that due to those debt concerns in both territories, and purchasing commodity currencies and eyeing, government securities from some of the BRICS nations as well. What have you made of that kind of rhetoric that's been put out there, and implications for South Africa, because they've really emphasized some interest in South African bonds in particular?
Well, the timing of that announcement, of course, came in the current turmoil in global markets, so that was somewhat surprising. But the sentiment that was expressed by the Mauritian Central Bank certainly isn't new. In fact, when the US was contemplating the first round of quantitative easing, that is sort of the rhetoric that one heard from most central banks, that such actions by the Fed were seen to be detrimental or would devalue the US dollar. And of course, that had all central banks reconsidering their current holdings of dollars and other reserve currencies. And we've seen particular noise coming out of China, which is the world's largest holder of dollar reserves. So certainly the announcement by the Mauritian Central Bank was surprising given the current mood, but certainly doesn't express a new sentiment in the market.
In the meantime, we've got the SARB itself saying that it sees no reason to make significant changes to currency composition of forex reserves. Market reaction to that news that also filtered through on Monday afternoon?
Well, that seems to have gone down fairly well domestically. Of course, South Africa, although the stock market is of course and the rand exposed to external developments, we don't seem to have a sort of banking crisis that one is seeing develop internationally. So that statement issued by the SARB, I think, was really just meant to calm markets and indicate a confidence in the current direction that the SARB has taken.